The Nasdaq Composites rally this year defied Wall Street expectations. The index up more than 30% year to date. And while we're hearing a lot of discussions over Megacap's concentration, there's a surprising assortment of first-half winners that investors aren't talking about. Yahoo Finance's Jared Blikre. He's live over at the New York Stock Exchange with the details. Hey, Jared.
Hey there. Well, for this rally to continue, investors need to be able to bet on more than just those concentrated stocks. Fortunately, a new basket has emerged over the last month, really playing the game of catch-up. I want to direct everybody's attention to the Wi-Fi interactives here. First, I'm starting out with the NASDAQ 100 and the year-to-date price action. You know, we've seen this screen a lot of times. Apple finally hitting $3 trillion today. But I want to show you what's happening, not at the sector level, but at some of my leaders level. And I have ETFs as proxies for various sectors here. In the upper left, Bito is a Bitcoin ETF. Guess what? Over the year, that is the #1 performing instrument, followed by chip stocks. We know chip stocks, big part of the bubble story, so not a surprise there. But this is a year-to-date view. Let me give you a month-to-date view. And you might be surprised to see that home builders, XHB, that's in the upper left, that is the leading performer over the month, followed by meme stocks. And we have retail, transportation, ARC, that's disruption, IPOs. Guess what? I'm sitting here, Savers Value Village, coming to market, listing here this morning at the New York Stock Exchange. We saw Kava come to market just a few weeks ago, 100% pop on the opening print there. So really a lot of money that was on the sidelines arguably is coming in and picking up the fringier parts of the market that I like to call. Following IPO, we got KWeb, Bito. KWeb is Chinese ETFs, is a Chinese ETF. Bito, again, Bitcoin. Then we got defense, chip stocks, momentum, all of those outperforming the S&P 500. So let me just give you a picture of some of these sectors that I'm talking about. And here's another one, regional banks. Regional banks have really bounced back. This is what it looks like month to date. Contrast that with year to date. There's still very few pockets of green here. Bank of the Ozark, that's up just nominally, and a couple others, but for the most part, still sitting on some heavy losses for the year, but playing catch up. Here, let me go to another heat map and we can do the transports. These are the companies that are bringing us the stuff that we need, as well as carrying people. We see Delta Airlines, that's up almost 30%, United up 15%, the railroads up nicely, FedEx up 14%. Similar situation with industrials, defense stocks. By the way, I'm going to go back to industrials. Remember GE? GE coming up with a blockbuster year. It's one of the top performers in the S&P 500, up 66%. Here's a 10-year chart, and you can see barely climbing back to the middle part of that range there. But let me just finish this by going to, I wanted to show you home builders as well. Here's what's happened over the last month. A couple of these names, W up 61%, Wayfair, and then you take a look at retail as well. We've really seen some of the stragglers come in over the last month, and that all gets back to that non-farm payrolls report that we were looking at earlier in the month. You combine that with the tame inflation numbers that we're seeing this morning. Hey, maybe there's something to look forward to in the second half of the year in terms of stocks. Need this rotation to continue though, the breadth expansion.
Yeah, well, we'll see if that ends up happening, Jared. That's what everybody's waiting for the second half. That's one of the big questions about the expansion of the rally. Thanks, appreciate it.